There are a lot of Panadols taken in 2019, a lot of mistakes making. What were the ones that gave everyone a headache, and especially those professionals? What kept them awake at night? So, 3 o'clock in the morning, you're staring at the clock, scratching your head, saying, why?
Looking at the ceiling.
Why? Yeah, looking at the ceiling. Why did we invest in that this year? What was the stock?
I can tell you.
And how did you clean it up?
Oh, well, that's half the problem. The one we really stuffed up this year was Reliance Worldwide. Now, it downgraded. For people who don't know, Reliance is a company that does the plumbing fixtures behind the wall, US and Europe.
And it is worldwide, yep.
Exactly right. We thought it was a bit more resilient to the macro, and when you saw the US housing market come down a little bit and Brexit issues with the UK, it lowered its growth target, and we missed that. Stock got sold off, but what we really did wrong was we sold it pretty close to the bottom. Now, this is a quality business. It had a lot of pain selling because it had raised a lot of money and a chairman had sold down, and I think we just needed to be a bit more patient, and we could have at least got a better price, 15% higher than where we sold it.
Well, Kraft Heinz was one that we got wrong, and the lesson there was really came down to quality. This is a business that was facing a lot of disruption risks, lower quality, private label coming at them, people buying less from the centre of the store coming at them. And with 3G, it was all centred on a roll-up story, and that became less probable as the underlying economics of Kraft Heinz started to deteriorate. So in that situation, the lesson is it's really hard for even a well-run business to escape headwinds coming at them.
My stock is New Hope Corporation, or No Hope as I've come to think
No
of
Hope,
it.
right.
Yeah, I was attracted to a great management team, an excellent balance sheet and really good assets, and I thought that there was maybe a bit too emotion about coal and what was going on in the coal market. In hindsight, I was too early, which I often find I actually am with cyclical stories. The cycle is still probably not showing signs of bottoming out, and it's probably the lesson I take out of it is that cycles tend to be longer on both the upside and the downside than I appreciate, and the entry point is difficult.
Amazon was a very interesting stock for me this year. So having seen it go through very strong positive earnings revisions through 2018, really as investments started to pay off and margins really lifted, and we had the stock in the portfolio, not that big, but in the portfolio. And then they decided to go after One Day Prime and put $1 billion a quarter into chasing that down and building out their business. And the earnings downgrades have been quite material. So we've exited it because it just doesn't fit process. Stock price has kind of gone nowhere, so it hasn't been a disaster in terms of what the share price did. But it tells you the market thinks about revisions not just at the EPS line, it thinks about what ultimately drives the stock is not always just earnings. It might be about revisions or cash flows or different things. So it's looking for whether revisions are actually meaningful in the way the stock's priced.
I mean, one stock that didn't go to plan would be Bathurst Resources. So they're a small coal producer in New Zealand. Bought the business on 2 times earnings, so I was pretty confident that I'd make some money there. One of the things I learnt was cheap can get cheaper, and there's a difference between value and a value trap. It's quite a fine line sometimes. To make money out of that stock, we really needed a re-rate in the valuation, and the stock just didn't have the liquidity for it. And if you don't get a re-rate in the valuation, you need to get those returns back via cash. And that wasn't going to happen given the reinvestment requirement in the business.
Well, luckily I didn't have this one in the portfolio, but I embarrassingly spoke about it on Buy Hold Sell. So that one was Vista Group for me. Going into the half-year result in August, the valuation was getting toppy and expectations were high. And what happened was a few left field things came about for them, and their outlook for growth was lower than what people were expecting. And that came about through the transition to a SaaS model. Which they will be migrating and starting that this year. So I think what I've really learnt from that is all high quality stocks will have a point where they're bad investments.
It didn't give me a headache. It gave their whole team a hernia, and it was Virgin Money, which was the old Clydesdale. It got absolutely smoked. There was some bad news around it, Brexit, some NIM pressures, and then also capital concerns at one point. The biggest lesson was just how the market can overreact to bad news. But also a lesson was if you have conviction, keep buying, which we did. We didn't buy enough of it, but it has doubled in the past little while. So it's definitely not a success story, but it definitely gave us a hernia, and it's on the way back.
A headache was a stock that I picked last year called Midway, which is it exports hard wood chips out of Australia, and everything was swimming right for it. The currency was in its favour, wood chip prices were up, the competitors globally were struggling on their various fronts. And I got that wrong. What I should have learnt was, when things are going good for a cyclical company, don't stay on board too long. That's your cue to leave. And sure enough, some of those things, the currency stayed with them, but prices fell, shipments were delayed, and all of a sudden, before you knew it, the outlook wasn't anywhere near as bullish. So those moving parts are quite sharp and happen quite quickly. So when you're on the rise in a cyclical type or a structurally cyclical type of business, take advantage of that and sell.
Look, Navigator Global, great little business, solid foundations, great people, made a big acquisition, Mesero, where they took their funds under management from 10 billion to 6 billion. They didn't pay anything for it. Now, in hindsight, the catch was 6 billion of incremental FUM. It's ended up being 2. And I think the market, the buy side and the sell side thought the numbers were going to be better. There's been quant downgrades. The stock went from $2.50 to $6 all the way back to $2.50. We're a strong buy down here. We think it's got great legs and big believer in that business now.